Welcome to ASB-Accounting Services Bulgaria, your trusted partner for accounting, tax, and business services in Bulgaria. Today we'll discuss an important topic for international entrepreneurs. What actually changes when a shareholder of a Bulgarian company is a foreign company instead of individual? At first glance, the structure may seem similar, but in practice this creates significant differences in taxation, compliance, banking, and risk exposure. First, ownership, structure, and transparency. When the shareholder is an individual, the ownership chain is simple and easy to verify. When the shareholder is a foreign company, you introduce a multi-layer structure. Bulgarian authorities and banks will require full disclosure of the ultimate beneficial owner. This includes corporate documents, shareholder registers, and sometimes notarized and apostilled documents. The more layers you have, the more complex and slower the process becomes. Second, banking and compliance challenges. This is one of the biggest practical differences. Bulgarian banks apply strict compliance checks when the shareholder is a foreign legal entity. Opening a capital accumulation account becomes significantly more difficult. Fully remote setups are often rejected or delayed. Banks will request detailed information about the foreign parent company, its activity, and source of funds. In many cases, this becomes the main bottleneck in the entire company formation process. Third, tax treatment and dividend flows. When the shareholder is an individual, dividends are subject to 5% withholding tax in Bulgaria. When the shareholder is a foreign company, the treatment depends on several factors. If the EU Parent-Subsidiary Directive applies, dividends may be exempt from withholding tax. If not, withholding tax may still apply depending on double tax treaties. Proper structuring is critical to avoid unnecessary tax leakage. Incorrect structuring can lead to full taxation both in Bulgaria and in the parent company's jurisdiction. Fourth, transfer pricing and intercompany transactions. When the shareholder is a company, intercompany transactions become almost inevitable. For example, management services, consulting, licensing, or cost allocations. These transactions must follow the arm's length principle. Transfer pricing documentation may be required depending on the thresholds and activity. Incorrect pricing can lead to tax adjustment, penalties, and hidden profit distribution risks. Fifth, management and control risks. This is often underestimated by foreign entrepreneurs. If the Bulgarian company is managed and controlled from another country, that country may claim taxation rights. This can result in dual taxation exposure. Simply having a Bulgarian company does not automatically guarantee Bulgarian tax residency. Substance, decision-making, and real management location are key factors. 6. Ongoing compliance and reporting complexity. A company owned by an individual is typically simpler to maintain. A company owned by a foreign entity often requires additional documentation for audits, more detailed accounting records, intercompany reconciliation, possible reporting obligation in multiple jurisdictions. This increases both compliance, risk, and accounting workload. 7. Perception and audit risks. Multi-layer international structures attract more attention from tax authorities. This does not mean they are problematic, but they must be properly structured and documented. Poorly structured setups are often challenged during audits. In some cases, expenses may be reclassified or transactions may be denied. In conclusion, using a foreign company's shareholder can be very effective when done correctly, especially for international structuring and tax optimizations. However, it incurs complexity that must be carefully managed. If you're considering such a structure, it is critical to analyze your specific situation before implementation, not after it. This content provides genuine information and does not constitute tax, accounting, or legal advice. Each situation is different and should be reviewed individually. Thank you for watching. Don't forget to like, subscribe, and hit the bell button for more tips on doing business in Bulgaria.